Right, let's continue. So we were explaining how this EU market movement works for you to see your confluences perfectly before. Was it EU or USDJPY? Was it EU? Yes. Uh-huh. Oh, it's still there, sir. Mhm. No. Tomorrow Friday is there holiday? Yeah. Okay. Now, I told you that for you to make use of a confluence, you have to do what? Get your elements of technical analysis very correctly. Now, let's do a backtesting on USDJPY. Now, this is USDJPY. At this point, we can say this market is good, is doing what? This particular one is coming down. So what will you do? You take your channel and you are expecting a what? A breakout to the upside to tell you that there's a what? Change of character. So now let's see what will happen afterwards. Now, Confluence will tell you that first of all, you need to see markets at a what? At a support zone. Now, once you see it, it's not for, I can't remove it. Is there a way they can remove it? Ah, this, eh. Now, it has gotten to a support zone, right? Confluence number one, your support zone. And I told you that any zone that is below or above the current market price is what you will refer to as a support and resistance. So if this current market price is here and you have a zone below, then this zone is seen as a what? Then if your current price is here and you have a zone here, this zone is referred to as what? Good. Now the market has gotten to a support zone, boom, and it has given a what? A chart pattern. What chart pattern? Bullish, bullish engulfing bar or three inside up. Now, now, but has it validated yet? No, because it's still in a what? Downtrend. Do you get it now? So, eh? Divergence. What is divergence? What's divergence? I don't know it though. Probably I know it. I know it, but that particular terminology. I might know it, you don't get. But that divergence, I really don't understand. Like what is this? What is that divergence? The term. No, no, I know. I want to understand. Okay, like if you don't even apply this, where is that? How will I hide it? So Yes. I need to understand that terminology. I'm not aware about it. It could be the same thing that we know. You get it could be the same thing, oh, but a different terminology. But okay, okay. You can't add indicator. No. Yeah. Okay. Okay. Surface. Lower low, and lower high. Yeah. Eh? Mm-hmm. Mm. Okay. Oh, okay. 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 Moving average. Yes. Yes. To go up. Yes. Oh, okay. I get your point. Okay. That divergence also means loss of momentum. Do you get it now? Mhm. Oh, okay. So another word for such thing, that terminology is that divergence. Okay. Okay, 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 okay. We all get it now. So at least, are we all learning now? We know that there's a terminology. You understand? We understand the concept about loss of momentum, failed swing, and all that. But in another word, you can call it what? Divergence. Are we getting it? So in any place you are trying to read analysis on and you see divergence and everything, so it will give you the same insight of this. Are we getting it now? So in a no, it's telling you that divergence means that it is telling you that you won't get a further downtrend again. Yes. Yes. Now see the chart pattern now. This mm, above to this goal. Yes. Look at this candlestick. Mhm. Do you get it now? That's a rejection. And we see, do you see the similarity? The similarity is that now the similarity of what he's saying is that now the similarity of what he's saying is that now this is the what? This is the liquidity of this candle. Is that not so? Now, if the candle that is forming does not close below it, with its full body. Do you still remember? Yes, it still implies that this particular candlestick you are seeing is still what? It's still giving you a valid interpretation that market is on this. What candlestick pattern is this? One, two, three. God bless you. So this three white soldier, where is the liquidity below it? This is lowest liquidity. So if markets, this is the liquidity you are looking at. Is that not the lowest point of that liquidity? So even though market come all the way down and did not close below the lowest price of this guy, then this guy is still acting as what? As an uptrend signal. Have you forgotten? I mentioned it. So okay, I now understand the divergence he's talking about now. So which means that any retracement that happens and did not close below the previous liquidity with the full body is a divergence.
That's why the indicator is stated.
That's the terminology for it, which means that yes.
That's why
Now, yes.
Lower high,
lower low.
But this lower low is just like
A fake out.
That's why the indicator printed lower low, higher lower
high, higher low.
So from here, if you mark this candle now, this is the low here. If you go to a 15-minute time frame, I'm very, very sure you will see a bullish engulfing bar.
Yeah, of course, definitely.
Very correct. See that kind of, you will see a bullish engulfing bar. Take your trade.
Yes, below this guy.
If this market closes above you, I'm expecting
to come. You never said that.
Very simple.
It's still the same explanation, which is still what loss of.
Always make sure you 4 hours. Don't leave
on 1 hour. Yeah.
This exponential moving average.
This moving average.
There are types of moving average.
Yes.
Moving average. Exponential.
I will get a divergence. It means the candle of that body
was not close below
the previous liquidity.
If it closes below the stand,
it keeps selling up.
Do we still remember? It's still the same. It's still the same explanation I gave that. Now, for example, yeah. Thank you very much. Now. No, it's arbitrary now. Is it still selling or is going up? Yeah?
This is the space that anybody that makes small profits. How can you cop that spirit of?
Is it?
There's a spirit that everybody just make one small money. Like first I made my first money, I was feeling like I know this.
Now, everybody check this. Now, the idea of the divergence is talking about, we've treated this from the beginning of this class. I never knew that another terminology name for it is divergence. But what I know is that, what I understand is that if market does not close below that liquidity, it is still what holding, and it is expected that it goes all the way up until what invalidates it is that the market what closes, the full body close. God bless you. I want to change the color. Okay. Now, guys, follow. You understand now?
And this is almost opposite colors.
You said? Okay. Now, guys, look at this example. Market is what? Coming down. And it has gotten to a point at which it can go down, a point of weakness, which is our what? Support. And after it formed, what formed? God bless you. Now, look at the liquidity of this bullish engulfing. So it tells you that whatever happens here, market is expected to reverse from this downtrend to a possible what? Till it gets to the next resistance. Is that not so? Now, imagine you now have a bullish engulfing bar, and afterwards, what you are getting, and afterwards, please follow. What you are getting is a now the tradition is that if a previous candle should form a particular color, the next candle is to give you the what? The same color. Now, it has gotten to a point of interest. You now have a what? A bullish engulfing bar. Once you have a bullish engulfing bar, what you are expecting is a what? That is, market must go to the upside, because the psychology behind this is that market has reversed, and it has what? Market has traded all the way down, and it has reversed because we get a what? A bullish engulfing bar. So we are expecting that this market go up to this particular zone here. Now, if what you are now getting afterward is a red candle, this red candle is expected to be seen as a what? As a retracement. Now, the only way that this bullish engulfing bar can be invalidated is if it continues to sell and closes below this liquidity here. Hmm? You said? So this, the bullish, now this bullish, you are correct, this bullish is now seen as a retracement for this downtrend. God bless you. So this red candle you are now seeing now is now what? Acting as the next impulsive movement. But what will further move this guy to the downside is when it closes below this what? The liquidity of this chart pattern, and of this candlestick pattern, because this candlestick pattern has given us an information that there's going to be a possible reversal from this guy up to the uptrend. Now, this is a downtrend. Boom. Now, let's say you draw a channel on this your downtrend. Are you following? on this your downtrend, and everything that happened here was wave one, wave two, wave three, wave four, wave five. This is a dummy explanation. Now when it gets to wave five, boom, a retracement happened here, boom, now causing a what, a candlestick pattern going to what, 50% of this entire guy. But don't forget, this is a what, a bullish candlestick pattern, telling you that there's going to be a reversal from this guy to the upside. But at the end of the day, what you are now getting is a what, is a red candle. Now if you are getting a red candle, you are expecting that after this retracement finish, which could be your ABC, the next 1 2 3 4 5 want to happen to the downside. So if the movement of this guy does not close below this candlestick pattern that you are seeing, then it won't go down further. This guy is still validated as a what, as a bullish engulfing bar. Now the validation, the invalidation of this bullish engulfing bar when it was close below it. Now there's a full body. If a wick should close, now if a wick should close below this guy, but at the end of the day, it's the body now close above it, that's what they call divergence. In other words, false breakout. Now this is a bullish engulfing bar, right? Now this engulfing bar is still what, is still valid. That is, market is still going to what, go up, even though you are seeing a same candle. Now market is still selling, boom, but it's not going up yet. Okay, it's fine. Market is still selling, boom. Are you getting it now? Because market is selling now like this, you cannot call this as a yardstick for you to enter a sell, because it has not broken below your what, your support, number one, and number two, the body of the candle has not closed this candlestick pattern that is giving you a bullish signal. Are you following? Okay. Yes. The body of this bullish, yes, not the wick, the body. Now the body of this candle must close below the liquidity of this guy before you can now say that this guy, yes, the wick of this guy, before you can now say that it has been invalid. Now now, if this market continues to sell like this, boom, this guy is still valid. The body of the candle must close below this guy to tell you that the candles, this candlestick pattern give you this signal has failed. Do you get it now? Now, in such a way that if you now get another sell, and it closes like this, God bless you. Now this is not called divergence again, yo. This is a what, a proper what, breakout. So you are expecting that it goes all the way down to the what, to the next zone. This is not a divergence any longer. This is a what, a proper market structure to the downside. Lower low, lower high, the next lower low. But in a situation market does not close below this liquidity, are you seeing it now? And the wick is below this guy, it is still a what, a divergence. Are you getting it now? That is, the body of this red candle did not close below the liquidity of this candlestick pattern. Are you getting it now? So And you can even see it's still in our what support zone. There's every possibility that this market,
But if the football is close to our zone, on the spot of that
exactly, it's not more a divergence, it's not a proper market structure to the downside.
close on it,
And it has to close below it. Yes. On the spot, and it's still a divergence. Yes.
Just pass out.
Even though it's a full body and it's not closing below this guy, it's still a divergence. Because anything can happen. It has not. Yes. Yes. You are now. What will you now see this as? W pattern. Where is the neckline? Are you getting the whole idea of that divergence now? So this one that happened here is a what? First breakout, which at the end of the day you're having a candlestick pattern of what? Hammerhead. Though the color is showing red, but it's still what? Hammerhead. And I told you when we started, you used to remember I said the color, but where it is formed is what matters. Do you get it now? Exactly what happened here. Exactly the same thing. Exactly the same thing that happened here. Exactly the same thing that happened here. Now, let's see this market. This market is what? Coming down from here. Lower low, lower high, lower low, lower high. Now, the next one, lower low. Now, you can see that this one, the body of this one close below this guy, right? That is why you have a further what? Do you see it now? Now, so lower low, lower high. Is that not so? Now, looking at this from here to here, is this a lower low? Yes. But the body of the candle, did it close below the liquidity here? No. So this is possible what? A false breakout. Which the breakout of this is even touching our what? Support zone. Are you getting it now? So if you should draw this to cover the liquidity of this guy, you can see that the body of this candle did not close below the lowest point of this guy before it reverses up to the upside, giving us another candlestick pattern, which is a what? This guy, three inside up. Yes, the first one is what? Bullish engulfing back. So what will you do here? Boom. From here, you channel it. Oh, it's not touching it. So it's not detailed then. It has to touch it. Are you getting it now? Now, are you getting it now? So this is a what? This is a what? W pattern. Where is the neckline? So this guy must break to the upside for you to now get a what? A validation of this W pattern. And which in other words, there's a breakout from this what? Downtrend channel. Are you understanding this thing now? So don't confuse yourself whenever you hear divergence. It's still the same what? Mhm. So let's see what happened. Do you see that now? Now, yes. Now, do you see this? This is a breakout. Is this not a breakout? I am expecting that this market retrace this whole guy to what 50% to 61.8 before anything happens. Do you get it now? Now, from this breakout, boom. Don't forget this is daily 4 hour. If you don't see the breakout, and I told you that 4 hour breakout is what is a very good confirmation of a what of a breakout. I hope people did not come out in fear. I'm coming. I want to take profit. 12.28. So our EU signal is still valid, right? It has not hit stop loss. Mhm. Signal still valid.
It was.
Okay, now let's continue. So so let's continue. Are we getting it now? Boom. It has retraced to 50 to 61.8. So I'm expecting that there is a breakout here already. Is that not so? Now this breakout is we are expecting that this market we are expecting that this market go all the way up. Please close it. I'm off it here. So this market is expected to come all the way up to this point. Is that not so? Because this is the length of this W pattern. So now let's see what will happen. Did you get there? Yes, we are backtesting. Are you getting it now? So now this is a channel. Boom, boom, boom. And this channel was responsible. This channel is responsible for the breakout from this trend. Are you following? So this is what I'm looking at now. This one, it has finished its work. Great. Are we following now? So that is how you add your confluence. Your first confluence is that market is at the support, number one. Number two confluence is that market is what? Market has given you, first of all, a okay. So now your confluence is con right? Your confluence is equals to what? Confirmation. Your confluence is equals to confirmation. And what are the confluences you are looking at from Infinix? Yes, yes. It was last same model April. Mm. So the T20, it's a new Infinix brand. Yes, yes, it has. All right. Eh? So let's continue. So let's continue. Confluence is equals to what? Confirmation. Now from the entry, so now that we've gotten boom, 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 this a breakout from this guy. So we are taking our what? Our long from here. to the upside because we see what a potential W pattern. Our stop loss will be below the liquidity. This is a setup. Eh? Yes, your entry should be after this was bullish engulfing boom. Because if you should see this, can you see the breakout? Boom, 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 breakout. So anything you are doing here, this is a setup. You are supposed to buy up to this point. So you can enter your buy here. You still continue, but it is a setup. This is a setup. Mm. But I'm just telling that this is a what? A setup. So your stop loss should be below this one liquidity. Anyone, any of the liquidity. Eh, do you get it now? This is on daily time frame. Oh. Whatever we are analyzing here is what you do on your smaller time, on your execution time frame. Do you get it now? Uh-huh. So this is the setup we have. And what are the confluences we are looking at? The confluence we look at, number one, is that you must have a what? Okay. Confluence. Now, the first thing you are looking out for is your what? Your market. Is the market correct? Market what? Market structure. First thing, market what? Market structure. So if you are looking at market structure, you want to be able to see your what? Your lower low, lower high, lower low, lower high, lower low, lower high. Do you get it now? And know where a divergence will be at the end. I don't learn new word. Are you getting it now? Eh? Eh. That's what they use. Psychological levels. Okay, like psychological zones. Uh-huh. So we should now start talking like what? Like a big boy. You understand? Like people that have big phones because we are getting there very soon. Now, so the market structure will let you know your failed swing, your loss of momentum, your divergence. Eh, for you to now know, for you to now know a point, for you to now know a point at which there's going to be a possible reversal. Do you get it now? Because market has gotten to a support level. So after you've what mark your market structure, the next thing you are looking at is there a support or resistance? Is there a support or resistance around the current price? Are you getting this confluence now? Now, the first thing you are determining is your what market structure. The second one is that at that your current price, boom, is there a now this current price there, is there a support or resistance around it? So you don't forget you've drawn your what your support, you've drawn, so you now start looking at the current price. This one is acting as a what support. Are you getting it now? So to now determine another what confluence, enter. Then after that, what candlestick what candlestick pattern can you see? Are you following? That is your confluence. So what candlestick pattern can you see as this your support? Bullish and bullish pin bar. Yes. Or another word, hammerhead, or another word. No, this guy, you know, what do they call this, the indecision candle? Dragonfly. Okay, you don't want to call it dragonfly, it's fine, but at least it has what support, and it's already giving you what, an hammerhead. Now this one is giving you a what, this one is giving you what, another what, indecision, spinning what, spinning bottom. Do you get it now? Are you getting it? So what candlestick pattern can you see after you've been able to see a support and resistance around the current price? Are you getting it now? So after that, boom, the next one will now be, can can you see a chart pattern? A chart pattern we add to the what, we add to your Confluence. So if you are unable to see a chart pattern on your daily time frame, you come down to a lower time frame, 1 hour, 4 hour, and see if you can get a chart pattern. The reason why we are doing this, the reason why we are doing this is for us to get an example so that we can be able to backtest and not be able to see futuristic price, not to confuse us. Now after you've done your analysis and everything, you are coming down to your work 4 hour, 1 hour time frame to monitor the movement. Do you still remember your top down analysis? To monitor the movement of the market, and it is around that place you start looking out for all these things, your confluence point. Yes, because you are an intraday trader. But if we want to go and do it on weekly, you will wait. Do you get? You can't do it. Even daily sef, you will wait till the next day for you to get confirmation, if you can be, if you can be that patient. It's how many, so you are doing all this on 4 hour time frame. You now miss it, you get it. Which one? Yes, now of course it's part of it. Now after, in fact after market structure, you are not even looking at support and resistance. The next thing you have to do is what, map out, map out your what, map out your trend line, map out your what, map out your trend line, trend line and channel. Are you seeing? Don't forget, you've done your zone already. You've created your zone already on weekly. You, that one is non-negotiable. It is now later you now be seeing those places as what, support and resistance to the current price. And where will you monitor the movement of that 4 hour time frame? Yeah, you said. Now if it is ranging, if it is ranging, then you put it in a box now. But first of all, you've determined the what, market structure. So your market structure that you determine will let you know if market is, be rest assured that if a market is ranging, it is coming from a preceding movement. God bless you, because that ranging is your what, is your consolidation phase. Do you get it now? So you determine your market structure. Once you determine your market structure, boom, we've been able to determine that this market structure is like this. We've done our zone non-negotiable. So our, we now map out our what, trend line and channel, which we've done here. Boom. For us to know if this will still respect to continue going down, or it breaks above, to validate a what? A change of what? A change of character from this downtrend to a possible uptrend. Hey, now look at this divergence we were talking about. Look at it at the upside. For upside scenario, where is the liquidity of this neckline? This highest point. This see the line now. Can you see the line? See the highest point. Is this the highest point? Can you see it? Yes. Let me take this. Uh, are you seeing it now? Now, if look at this guy now, did he break out? The body closed above the body of this guy, but did he close above this liquidity? No. So anything can what happen. Market can still come all the way down, which actually happened. Because if you check the next candle, what happened? Did it go up further? It went up, but acted as a first breakout, and at the end of the day, the indecision. Are you getting it now? But you are expecting a full breakout from this guy to tell you that there is a what? A confirmed breakout that yes, this guy is going to go all the way up. So probably the other word for your divergence will now be, I don't know, maybe it's convergence. What's now the application of convergence? Eh? Convergence. So what is now the application of convergence? You don't know that one. But I shall not say there is convergence. But I will go and do research on it. But I'm very sure that it is still part of what we know already. It's just that the terminology is what exactly. But I already know divergence now. Divergence is also a loss of momentum or failed swing. Or you get or a point that is responsible for a what? A change of character. Are we getting it? A point that is responsible for a change of character from an uptrend to a possible uptrend. That can also be a what? A divergence point. Oh, I think I like that. Do you get it? A point, the beginning point that is responsible for a change of what? Character is referred to as what? A divergence point. Do you get it now? Oh! Are we getting it now? That is it. Isn't divergence means what? Divert. Is diverting from a what? From a downtrend to an uptrend. English. Divergence also means what? Change of character. Now, are we taking note of these confluences? Now, these are the things we are to determine before you press that by yourself. All these things that you are seeing here. So if this is not, if you are not seeing this and you enter a buy, if you are not seeing this and you enter a sell, you are in trouble. Things to look out for before you, yes, of course. That is your confluence too. Of course, see that Fibonacci, that one is not negotiable. You can use it. You can use it. You've now come to love Fibonacci. You can use Fibonacci. See, you can use Fibonacci anywhere. You can use Fibonacci anywhere. In as much you can discover a high and a low. Now I can use a Fibonacci. That one is not negotiable in your confluence to this low. Did it come to 50%? Yes. And after the 50%, did it come down? Yes. From this point to this point. This one. Okay, all right, man. But you understand everything now. Now, boom, boom, boom. Now from this point to this point, you can do your Fibonacci 2 again. Now, did it come to 50 to 61.8? Yes, and it's sold down. Great. This one has finished its work. Take your Fibonacci again from this point to this point. Oh, Fibonacci again. From where's your Fibonacci? Fibonacci from this point to this point. This the retracement, did it get to 50 to 61.8? Yes. Look at it now. From this point to this point. See this retracement. Did it get to 50 to 61.8? Yes. And it starts selling all the way down. Are you getting it now? Your Fibonacci, the retracement must come in between 50% to 61.8. And it touched what 50% before it starts selling all the way down. Now, your Fibonacci is non-negotiable to you. It's work anywhere in as much you can discover a low and high. Now, from this point to this point, retracement, boom, 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 boom. Do you see it now? It's got to 76.4, but at the end of the day, came back to 50 to 61.8, all the way down to 0 and minus 0.27. Are you seeing it now? Do you get it? Now, this is another point and another point. Abi, take your Fibonacci. Your Fibonacci is non-negotiable to your price action. Boom. Do you get it now? Boom, boom. In between 50 to 61.8, all the way down. In between 50 to 61.8. Yes.
But I think it's on 70
It's
something.
it almost hit it. But at the end of the day, it still came back to 50 to 61.8 in between. See, look at the closing price now.
Okay.
Yes, now. Yeah, then both. Because if the market should close, the next one will open now. So that point is your what? Is your closing point. Anyone? Yes.
So now with this,
Well, if it's anyone, what will I take a sell from them? How do I calculate this?
Now,
another level is like,
market is going up, up, up. Are you supposed to sell now? No. You have to sell when you get a what? So when you are you supposed to enter at this candle? So are you supposed to enter at this next candle? Are you supposed to enter at this candle?
Yes.
Then did the market go all the way down for that?
oh, you go for that money too much.
This is daily time frame. Oh.
Okay, it must be on daily.
No, we are doing this and we are just doing this. We are just doing this analysis, yes, because of back testing. We are to do it on 4-hour time frame. Oh. This one, everything we are doing here is still the same thing you can do on your 4-hour.
But what I'm saying is, why can't I enter in this? All this money I don't miss for here. It's annoying.
No.
Money is important. This place now, I don't know say 50 or 61 if you enter. So
Now,
let's put some
now
trading
imagine
orders
you
there.
enter here and market is not going all the way up. Will you be able to withstand the drawdown before it comes back? Market come in between 50 to 61.8. You now if you enter here, boom, and the market is still going all the way up, just know that you'll be in drawdown. Will you be able to withstand the drawdown?
That's not the why I get. That was the one you call to mitigate it and diverge it. Divergence it. I'm going to using that in the next one. I was like,
So your Fibonacci is non-negotiable. In fact, see, look at this. Did we put zone here?
no,
Did we put I know, but did you put major and minor zone here? Because it must be used, it must be there. It is still the same thing with your Fibonacci. Your Fibonacci is non-negotiable. Yes, Fibonacci is left for you as a trader to use, for you to know the point of at which a retracement will end, for you to know where the next impulsive movement will continue. It is non-negotiable.
So you are saying we should not just enter those levels. Just
So
wait
the
for
Fibonacci
policy.
will allow you to have a proper entry. A Fibonacci will let you have a what? A proper entry. You will not just enter anyhow. At which you will use it when you are able to discover a low and high, and it has retraced in between your average ratio of 50% and 61.8. Now, look at this. Now, market has broken out from this guy. Is that not so? So we are now seeing this as a complete what? Impulsive. So what will you now do? Your Fibonacci now is now covering all the old price from this what? High to the what? Low.
I was able to see.
Now, are you seeing this now? So you are expecting that market would respect this 50 to 61.8. Is that not so? For you to sell. But you have to wait patiently for a what? A confirmation for your Confluence, which is what? What candlestick pattern can you see? Can you see any candlestick pattern at the 50 to 61.8%? So you are still waiting patiently. And as a matter of fact,
So 6 days ago, and
this market has closed above this line. So now, exactly. Do you still remember? I told you that each of this ratio, you are seeing them as what? Support and resistance also. But a Fibonacci kind of support and resistance. That if a particular line break and close above, it will come to the next. Now look at this. Did it close above it? Did it go to the next? Did it close above it? Did it go to the next? Yes. Did it close above it? Did it go to the next? Did it close above it? I'm expecting it to come to the next one at what? 76.4. Are you getting it now? Now let's see what happened. Did it get there? Almost. Do you get it now?
that's zone. That's what was
But if this guy now closes below 61.8, then it is what? Coming down. So this one you are seeing as a support now has now turned into a what? Resistance. The same logic. Do you remember? Now let's see. Has it closed below it? No. Has it closed below it? Yes. Do you see it now? And when it closed below it, we are expecting it that it comes to the next, which is there. Did it come to the next? Yes. If it closes below this guy too, you are expecting that it comes to the next. Do you get it now? Now it's closed above it. When it closed above it, you are expecting that it comes to the next one, which is this one. Did it get there? Almost. And don't forget, we have a what? A resistance. Support or resistance around the current price. Do you see it now? A resistance. So, and it's already giving us another what? Pattern. Now, what candlestick pattern can you see here?
and the evening star.
Bearish engulfing bar.
Okay, go.
Bearish. Is this red engulf this green? Now, and you have a potential.
Divergence.
Now, a potential what? A potential what? M pattern. Are you getting it now? All right. This one. Now, let's see what happened. As this M pattern validates or invalidates? God bless you. Now, it has broken above this guy. I'm expecting that the next place it's coming to is this way. So it has to completely break out from this zone. You are looking at that too. All right. Are you seeing it now? So it is now. This market is going in what trend? Higher high, higher low, higher high, higher low. The next higher high. So this boom invalidates. So you are seeing what? An uptrend right now. So what will you do? Take your channel. Is channel part of the confluences? Have we identified a market structure? So after we identify a market structure, what are we supposed to do? Map out your trend line and channel. Now, after we've mapped out our trend line and channel, the next one is that support or resistance around the current price. This is the current price. Now, this zone is acting as a what? God. But look, I said the current price. I said current price. Where is the current price? This is the current price. So this zone is seen as a what? But I understand what you are saying, because it's now you are seeing this one as a what? God bless you. Are you getting it now? Don't forget, there's a minor zone supposed to be in between these two major zones. Are we following? Now, what candlestick pattern can you see? A bullish engulfing bar, or you can call it a what? A maribozu, a bullish maribozu. And a bullish maribozu tells you what? A continuation. So I'm still expecting this market to go all the way up to now come and test this what? This resistance of this trend line. Eh? Now, now listen. Now listen to this. If this market is going, it is also what? Trending. And don't forget, I tell you that if a market is moving, a particular trend is what? Is emanating, is emerging. Do you see that now? That's another trend going on in between this trend. It's going the same direction, but we are trailing this what? This trend, because market trends. So it is going currently in an uptrend within another what? Uptrend. So in such a way that if this one breaks, this trend has become invalid, but this trend is still holding, then it might now come down to test this support and still continue going up further. Are you getting it now? And if it breaks it, probably we have a what? A downtrend that is happening. So what candlestick pattern can you see? Bullish maribozu. Market is still definitely going to go up. Now, this is happening. Is a what? Is a retest. Is that not so? Did they close below the liquidity of this guy? So it is still what? Valid. Do you still remember? So this, boom, take it off because it has broken out. So this is what I'm seeing now. All right. Now, if you can see this on a smaller time frame, this guy will be giving you a what? What chart pattern? Now, the last one is saying that can you see a chart pattern? This one is saying what candlestick pattern can you see? A what? Now, the first one is what candlestick pattern can you see? A what? A bullish engulfing or a bullish maribozu. Now, the next one say, can you see a chart pattern? Yes, I can see a chart pattern. What chart pattern can I see? A symmetrical triangle. It's on daily time frame. That's why it's like this. So, if you come to lower time frame, you go see and where. So you are expecting that this market does what? And continue the uptrend movement. Can you see our confluence points? These are your confluences. These are the confirmation. Equals to confirmation. Now let's see what happens. Are you seeing it? Hmm? Eh? You say? Mm. The confluence. List of things you must watch out.
No, confidence is like all these things you have to go for in general.
That complex is not everything is complex. Were you here at the beginning when we were talking about Confluence? Oh, you were not in the class.
Was it that you were sitting in your class?
Yes.
No.
Like at the beginning of this class. It did not come. Yes. At the beginning of this class, when I spoke about Confluence. Sir? Exactly. Exactly. So
if your confidence no complete, no complete.
so when do do you know how music production works? If you want to produce music,
Yeah.
you know how it works.
Both organ,
Exactly. You bring your guitar, you bring your keyboard, you bring now each of those things are what are the elements of technical analysis. Combination of everything is now what your confluence is to now produce you a song. To now produce you a song. Now the song can now be to the what upside or to the downside as your confirmation. Are you getting it now? Now I was seeing a triangle here, but now I am now seeing another chart pattern. What chart pattern? What chart pattern? You can call this a bearish, bullish rectangle. God bless you. Bullish rectangle number one. That's number one. Is that not so? Now don't forget, there's a what? There's a breakout. Listen, there's a breakout from this channel, oh, but market structure to the upside is still holding. God bless you. From here to here, higher high, higher low. Is it correct? I know you say no. Okay, let's start from here. From here to here, higher high, higher low, higher high, higher low. Are we not getting it now? Higher high, higher low, higher high. For us to have a change of character, this guy must close below which guy? Do you get it now? Before you call it change of character. But if it did not break below it, market is still expected to go up. All this that is happening here is just what? Do you get it now? Market structure is still to the upside. And now we are able to get a chart pattern. First of all, our zone has broken to the upside. No, to the upside. So I'm expecting that this market come to this next zone here. But I'm seeing a chart pattern here that is, I'm not calling this a bullish rectangle. Now let's see. Now, which in other words, this is the word M pattern. Do you get it now? Then what will you do? Take your Fibonacci to know the point at which that retracement will end. So I'm expecting this retracement to end where? This point. Is that not so? I'm expecting this retracement to come down to this point. Is that not so? And to this point, 5061.8. Acting as a retest for our what? W pattern. This is the neckline of our W pattern. It has gone, no, it's now coming back as a retest. Pull back to this neckline. So, do you get it now? Now, let's see it. A bullish engulfing bar at our 38.2. Do you see it now? A bullish engulfing bar at our 38.2. Did it break? No. Did it break? Yes. Did it close below? No. So, I'm expecting that if it respects, it goes to the next one. If this one respects and it closes above, it goes to the next one. If this one respects, it closes above, it goes to the next one. Are you following, guys? Now, let's continue now. So, this is a what? This is a what? A channel. Do you not see my new channel now? Are you seeing my new channel now? Are you getting it? Now, the retracement here got to 38.2 of this overall trend here because this guy, there's a breakout here. So once there's a breakout here, you are expecting that a retracement will happen for this overall guy, which happens. So this is wave 1, wave 2, wave 3 is ongoing, which still implies that yes, this breakout that happened is a what is a correct breakout. This one that is just happening is just to what retrace. Our market is still coming up to this point. All right. Yeah. Now, can you see this? Market is still within our uptrend. Are you seeing it now? Are you seeing it now? Now, what chart pattern can you see here again? God bless you. God bless you. God bless you. And it is expected to move the same height. Is that not so? So this market is coming to this height. V bottom now. Now, do you see? Did it get to our next zone? Analysis conforming. Simple as ABC. But will be very simple. Now, do you see this now? Boom. So the resistance of this what? Of this our uptrend channel. Did you respect it? Yes. Did it touch your zone? Yes. Now, I'm not seeing this as a confluence point again. To take a, is it a buy or a sell? God bless you. Because I told you that at your current price, you are seeing any zone above it as a God bless you. Now, what candlestick pattern can I see there? Following our confluence market structure. So what market structure can we identify here now at this point? A downtrend. If you come down to lower time frame, you will be able to see it properly. What now? Map out your trend line channel. Okay, I've done it. Boom. Support or resistance around the current price. Yes, there's a resistance, and there's a support here. And other ones you will be drawing. You know, we don't have our minor, and we don't have our sub zones. Do you get it now? Now, the next one is can what candlestick pattern can you see here? What candlestick pattern is this? A bearish. This signal and bearish engulfing. Are you getting it now? So I'm expecting that this market sells all the way down back to this zone because market moves from zone to zone, which can now act as a what? As a 50% retracement for this overall. But let's see. So wave 1, wave 2, wave 3 is now this particular wave happening is what? Wave 4. Did it get to your support zone? Yes. Until it breaks out from this guy. Because I'm not seeing this as a counter what? Trend line. Are you following? Do you see it now? Overall is still uptrend. So boom, delete. Be rest assured that this guy will happen here on a smaller time frame. You are already seeing your market structure. So you are trailing this guy all the way up. Are you getting it now? On a smaller time frame, the market structure is happening. Which this retracement has acted as a to the highest point. Am I correct? Lowest point to the highest. Did it get to 50 and 61 point? Or yes. To give us a bullish engulfing bar. Boom, another confluence point. What are my confluences? Fibonacci, boom, boom, which I'm looking at for 50 to 61.8. Number 1. Number 2, my support channel. Is that not it? Number 3, candlestick pattern, which I'm very sure if I come to a lower time frame, I will say what? a chart pattern. Do you get it now? So this is 3 white soldier. So I'm still expecting this market to go up. It will definitely go up. Are you seeing it? It will definitely go up. It will definitely go up. It is up. Are you seeing it now? 3 white soldiers. There was a retracement, but did it close below it? No. Did it went up? Yes. It will, from here you don't cash out already. From this now it came down to your support channel again. What chart pattern again are you seeing on this your support? God bless you. Tweezers what? Tweezers bottom. So I'm still expecting that this market goes all the way up, in which I can see a what? A chart pattern. A, B, C, D, then E. Then after the E, do you understand? After the E, I'm expecting a breakout. Now, do you see the E now? The E has formed. Have you seen the E? Now, but there's a breakout already. But after this E that has formed, this is a breakout. So do you see that now? I'm expecting that this market come all the way up to back to our what? Major zone. If it breaks, it comes to this place. If it breaks, it comes to this height. And if everything breaks, it's coming to our next zone up. So this market is still what? Bearish or bullish? God bless you. Do you see it now? Are you seeing it now? Are you seeing it now? It's moving up. I don't they make money like this, oh. Because are you seeing it? This is now after you've known this chart pattern. This chart pattern is coming from where? From a preceding movement. What's the preceding movement? Now that is there's a consolidation going on here, which I'm expecting that the breakout will be to the upside. And after the breakout, I enter a buy here up to this point, my TP1 hits. And it is still, and I'm expecting it to still go the same height to this point, oh. Now, guys, are you seeing how analysis is playing out? All because I was able to discover chart pattern. Chart pattern, boom. Uptrend channel, boom. Candlestick pattern, boom.
Boom, boom, man, boom, boom, man, boom, the money, man. That for chase money. Yeah. But boss, what does the question?
Now, a Maribozu breakout. A Maribozu breakout from my zone, you are going to the next zone. Anything can happen, but we are going to the next zone. Which, eh? I see it is already going up. It is already going up. I'm seeing this as a retest.
Hey, news. News.
Now, I told you that there's going to. I told you that. Wait, now. I told you that along the way. So wait. So calm down. Calm down. The point of interest. First of all, as market got into our TP1, yes, we are out. This is daily time frame, oh. These are a lot of things. If you don't they see another chart pattern, you're not supposed to get out. Now, listen to this. it has gotten to your 50% of this channel. 50% of this channel is still a valid point, a point of interest, which was responsible for this chart pattern M. And did the M pattern move the same length? Yes. Now, boom, break below. Now it has broken below, but look at your what market structure. Your market structure is your what? Is your key. Lower, abi, lower, higher low, higher high, higher low, higher high. Is this a higher low or lower low? Eh? Now let's continue. Let's start again from this point. Higher high, higher low, higher high, higher low, higher high. Is this higher low? It has not broken below this guy. Even this one sef, it has not broken below it. So we are still on a what? We are still on a buy. You understand? Until it breaks below this guy before you call it what? Change of character.
But the problem is that the SL will have been hit for that time.
No, which SL is eating? Where are you entering from?
All this was really
We don't enter from here. We don't cash out already. Now we don't come out.
because
even if
But you will
see
break
that
even
hand
now.
pattern,
Maybe you
you
break
can
even.
you can break even there.
You break even now.
What do you call it? So at that hand pattern, that neckline.
Yeah, this divergence. Hey, EU is selling, no.
They go in there, so they cry. Wait, this is.
I don't know. So we will continue tomorrow. Thank you, everyone. God bless you.